Is Trump's attempt at a global trade war impacting the European energy markets? Are we going to see any sort of recovery, or are we just continuing to slide down this week? All that and more in today's Clever Markets Technical Analysis Outlook for the European energy markets for the 7th of April 2025. My name is Marcello Kolax. I'm the Managing Director at Clever Markets, and I'm walking you through a few charts today. Okay, so before we go into any detail, of course, we have to start with a disclaimer. Nothing you see here actually is trading advice. It's just my humble opinions, of course. All right, as you know, we are starting with a little overview of what the Clever Markets dashboard is showing us. So we are understanding that we have moved from mostly neutral towards bearish for most of these markets. TTF, NBP, German Power, EUAs, all of them are showing bearish, strongly bearish inclinations. There is a chance for the market to bounce higher this morning, but what this condition is that must be fulfilled in order for the market to bounce before we continue lower. We'll talk about that market by market, but overall, with or without a bounce, chances are that we are gonna continue lower this week. And the good thing with technical analysis is we are not predicting anything. We are just identifying what's most likely, and then we draw our preferred and alternative scenarios. By the way, I would love to say hello to you. I'll be in Amsterdam at the Flame Conference on the 14th of May, and I'll also be at the X Energy Exchanges Conference in Athens on the 8th of May. For both of these events, I am hosting a technical analysis masterclass. So I want to keep it small, maybe like just 8 people maximum per group. So if you want to be one of the lucky ones, let me know. There is more details somewhere around here. Okay, so now let's move on to the markets, shall we? I am starting as always with the sentiment poll for the TTF. There you go. And we see that from one week to another, the market hasn't really changed. So we are still fairly balanced in the bullish and the bearish opinions of the market. But you can see that the bears are slowly taking up a greater share. I don't think it's enough to be significant, to be completely honest. The market is still reasonably split with a slight bullish preference. Now, what does it mean for the markets? So here we are having a big overview of the TTF and NBP front month, TTF and NBP front season. We are looking at EUA's German Power, what is this? Henry Hub, and of course, look at this, boom, down here. This is Brent after Trump's disastrous announcement of these retaliatory tariffs. Okay, so we see all of them are down, and you can see this here is always the most important preceding trough. So for some markets we have pushed below it, for others we haven't. For example, EUAs, there is no question that we are now actually continuing lower, right? So overall, we have broken past these ranges that have dominated the market for, I don't know, 2 or 3 weeks, I want to say. So these sideways ranges are all resolved to, or mostly resolved to this, to the downside. And we are now expecting more losses. How low it can go? Let's have a look at each market individually. All right, so we are starting, of course, with the TTF front month. Not like this. I'll take myself away. There you go. And here we see on the weekly chart we have now broken below the broadening wedge as expected, so nothing new here. But the bears would be, I mean, the bears are already in control, but another bearish confirmation would be a move below the 36.4 euros per megawatt hour, which is the trough here from the 3rd of March. So we don't need any more confirmation, like the bears are in charge. Also on the weekly chart, it is looking pretty optimistic, especially with this reasonably high volume. All the tools are bearish aligned. We get a death cross on the moving averages as well. It's a very bearish signal. So what is a death cross? I quickly want to go into that. So there is sometimes some confusion of what it actually is. So a death cross is a very specific moving average crossover where the longer moving average, so in my case 12, is going down, and then we have the shorter moving average, in my case that's 8, also go down, but even faster. So it's not just like a normal crossover, like one goes higher, one goes lower. No. It's like both are going down, and the most recent moving average goes down even faster. So what does that mean? So that's a very strongly bearish signal, and it shows that in the, well, usually like in the medium and in the short term, the market is going down, okay, but right now, in the shorter term, the market is going down significantly more than it is already going down in the medium term. So essentially it's a downtrend acceleration. That's what it is. And that's why it is such a bearish pattern overall. Cool, so all looking pretty bearish to me. Then we can create broadening wedge targets, but I don't really like them. They're really, really unreliable. So there's different ways of calculating them. Some take like the lowest bit, or some take the widest. Some add up the narrow and the wide distance, and then just turn this into a target by measuring from here to wherever this added up line is. I don't like any of that. I think what's more reasonable, what's more useful is actually working with preceding troughs. This gives us little levels, and also if you're so inclined for the weekly chart, you could start using Fibonacci extensions. So actually, I'll just draw one on just to show you what I mean. So Fibonacci extensions are actually there to extend the preceding down leg. Then after the correction, we continue. So I have my extension tool selected right now, my Fibonacci extension tool. So I mark out the down leg, I mark out the corrective arc leg, and now you can see we have the 100 here. So it's giving us a target at 22.5 euros per megawatt hour. Here's the thing, I am not saying the market goes down to 22.5, I'm just saying a target is there, and targets don't need to be hit at all, right? I'm just saying it exists there. Why am I so hesitant? Because right now we are in the 36 area. Talking about something at 22.5 is a little bit out there, but you should be aware that it exists. Now, if you say, hold on, there's a little bit much for me, Marcello, we can also start drawing in other Fibonacci extension levels. Remember, these are not Fib retracements, they are extensions. And you can see now I drew in all the classics: 23.6, 38.2, 61.8, 50, which is not a Fib number, of course. And usually after the correction, we draw this whole thing in, and we know that the down leg continues below the 23.6% Fib retracement. In our case, it's 40.07. So past this, we would have known, okay, now we are bearish. I mean, there's like a weekly candle, it took us a week, right? We are below the 38.2% Fib extension, so also fairly bearish. And now we are moving towards the 50, 34, before we approach the 61.8% at 31.29 euros per megawatt hour. And then further down, we have the 22.5, right? So there's so many more way stops on the way lower. Anyway, we are not going to make any trading decisions on the weekly chart. For that, we use the daily and hourly chart. So let's have a look at what the daily chart on the TTF is doing. So we had here once again our broadening wedge. We have pushed below the 200-day exponential moving average quite significantly. So there's a good bearish signal. We are below the broadening wedge on the weekly chart. We got 2 consecutive closes below it. That's bearish. We had this triangle that was resolved lower, also confirmed. So it's all looking pretty good for the bears, I want to say. So this congestion was resolved, and now we are heading lower. Now, these patterns also give us downside targets, the triangles. And what we do here is we measure the distance from here to there. So you can see the first move in, right? We're not taking this move here and then extend this line towards here. Yeah, so we don't do any of that business as it is per textbook. We do something a little bit more practical, something it's a little bit more useful. There you go. We just take this distance here, so we're moving one step in. We're not taking this, we're moving one step in. And then we measure this distance from here to down there, which gives us 30. So 30 euros per megawatt hour is the triangle's downside target, right? And now 30, okay, let's keep that in mind, is past the 34 on the weekly chart, right? And it is closer to the 61.8% Fib extension. So you can see there's like multi-time frame analysis, how all these levels start playing together. We're not going to plummet 6 euros within 1 day, so this will take some time, but the target should definitely be kept an eye on. Okay, so the next thing is now we're on the hourly chart, not the weekly chart. We are on the hourly chart now, and we had the strong down leg. Let me zoom out. We had the strong down leg. We saw that last Friday we had a little bit of a base forming, and this. How do we know it is a base? Well, first of all, we did have a hammer candle, which is a it's a bullish candle pattern. So the hammer shows us that it has a small body and a long lower wick and almost a non-existent upper body. Upper wick, apologies. And it shows us that the bears intraday, or this is already intraday, we're on an hourly chart, but intra-period, the bears tried to push even lower, failed to hold on to their gains, and we ended up where we started. So this overall is a bullish trigger. Then if we were in the hour on Friday in this market, we would have put a bullish confirmation of this candle pattern at the high, right? And was immediately confirmed with this next hourly candle last Friday, right? So this is like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this here is the last Friday essentially, right? So here we would know, oh, okay, so if we push above this 36.35, we could be dealing with an upside correction. Overall, I still think that the market will push lower eventually, but for now there is a chance for like a consolidation or at least a corrective high move higher before we continue. Now, you can see for the second half of Friday, the market didn't really go anywhere, and we didn't do much. Interestingly, what you also did in order to avoid getting in on this action early, on this bullish corrective action, is we drew in a Fibonacci retracements, right? So here we are now going, or last Friday we went with the assumption that, there you go, after this down leg, we found the base and now we are correcting higher. How do we know that we are correcting higher? Well, some people might take the hammer. Other people use the 23.6% Fib retracement of this down leg, right? And that's up here at 37.02. So now I want to say, of course, now hindsight trading is 2020. It's always good, always the best P&L for hindsight trading, right? But overall, if you want to play it, usually like in general, if you want to play it a little bit safer, waiting for the 23.6% Fib retracement before we get an upside correction is usually the safer one. We get an earlier entry with the candle. In this case, and in most cases, to be completely honest, that's why I'm taking this as an example. But there is a higher chance for this whole thing to go nowhere or to simply continue lower. All right, so in this case, what am I doing? I'll put it here again. Yes, okay, cool. So once again, now we start this Monday in no man's land. So we would be bearish below 35.6, if you want to play it safe, below 35.15, and we would have, and the bears would simply continue, and we would have a upside correction above the 23.6% Fib retracement at 37.02. Now once again, this is just a correction, and ultimately I do believe, even if we have a correction, that the bears will continue. That's why I have this sort of thing. Why do I think that? I think that because stochastic is giving us a bullish signal. We moved above the oversold level, but we are not above the 23.6% Fib yet, so it's just a setup. So bullish stochastic, while we have bearish momentum, MACD, bearishness also on the DMI, Directional Movement Index, and bearishness on the trend tools, which is the moving averages, and bearishness as shown with like the high volume on the down legs. So all of this, overall bearish trend with a momentum with a bullish kind of setup, shows me potential upside correction before we continue lower. Now, when do we know that? So if we push higher, so I don't think we'll push significantly higher, but if we do, right? So this is more education right now. I hope you enjoy that. So we would know that the correction turns into a full-on bullish reversal if we move above the 61.8% Fib retracement. So usually, like in this case, I don't think it will happen, but if it does, if the upside correction goes below the beyond the 38.5, even I couldn't put in the 50% retracement. That's useful sometimes. There you go, at 39.12. And then I would get more and more nervous about a downside continuing, right? So there you go, above the 61.8% Fib. We could then say, now possibly bullish continuation. Okay, so how is this traded? Once again, this is not trading advice. This is just some box standard thoughts that I have that are not specific to your needs at all. It's just something that some traders might choose to do, like in general. Yeah, I always have to make sure I say this. Okay, cool. So now let's say, okay, let me zoom in. There you go. Okay, cool. There you go. So we had this bullish setup and we are now starting the week. Bearishness would continue below 35.15. So there would be a chance. So if you're neutral, by the way, there would be a chance for us to simply continue. If you're already short, cool, we'll just continue, right? If you are short already, and here's the thing, I can't tell you, oh, should I go in, should I go out? I throw this back at you and I ask you, imagine you are short and you start, for whatever reason, you start a week short, right? Or you think, hey, we'll continue lower, so you're entering short this morning, but we do start pushing higher, then your question is, okay, when do I get out? Instead of giving you a level, I give you a framework that will help you long term, okay? The question you have to ask yourself is, if you're short, are you okay for the market to move towards 38.19 and then you're still wrong? Are you okay with that? And you have to close out, right? Are you okay with a loss if the market moves towards 39.12? And are you able to sit on your hands as the market moves towards 40? Can you do this? Are you willing? Is your bearish conviction, with all the fundamentals that you're looking at, is your bearish conviction strong enough to wait it out until 40 if you really don't want to lock this loss, right? This mini loss here. And are you willing for it to wait, and are you willing to wait and then for it to continue lower? Because remember, even at this point at 40, you can still be wrong. Are you okay with taking that loss? So now we have to start looking at your risk management, right? So this is the framework I like to work with. Instead, if some traders ask me, so instead of giving a level, I'm asking, hey, are you okay with this loss? And then usually we reset it a little bit and then it becomes a little bit clearer. Okay, cool. So my answer is no, I wouldn't be okay with that. So if I was short for whatever reason already in the morning, probably, you know what, I'll just bite the bullet. I'll just take it, get out at 37. And if we then just continue lower, that's fine. I can always enter short again, right? I can always continue the direction. But would I be okay with this here? I wouldn't be. Okay, all right, that was a lot. Join me for the masterclass in Athens and in Amsterdam at the two conferences. If you have any questions, let me know. I'm your guy, all things TA. Everyone have a good start into the week. See you around and bye-bye.